Mad family and friends, firstly, thank you for watching. I'm really passionate about saving my customers money, and a guarantor loan is just the best invention ever if your parents qualify. Now, there's a lot of uncertainty around guarantor loans. Almost every meeting that I've done in the last 10 years, people always think that the guarantor loan means that the parents guarantee the full loan, and that's just not true. The banks do limited guarantees. A limited guarantee is 20% of the loan. That's what's required for the banks to be happy. They don't guarantee the full loan. Well, what I'm going to do in this video is cut down the facts, show you exactly how it works, what banks are good at doing it, and hopefully you'll learn a little bit more about guarantor loans. Now, as always, the best way that I've realized to teach customers is by role play. So I've done up a scenario, and stick with me. If we bought a property for $1 million in Australia, the fees are going to be about 40. Now, I haven't broken down all those fees. I've done a video going through each and every one of those fees. If you haven't bought a property and you don't want to get caught out, please watch this video where I really break down all the buying associated fees in Australia. So if I buy it for $1 million, the fees are 40. The total cost, including fees, is going to be $1,040,000. Now, in this particular example, these customers have got $50,000, but what they're buying is a house which needs a bit of work, and they have luckily got guarantors willing to help them out. So they asked me, George, do I have to put my 50 grand in, or can I keep it to do some minor renovations? We want to do a kitchen, and we want to do the bathrooms, and we want to do some painting. I said, because you got guarantors, you can keep your 50 grand. I can borrow you the whole purchase amount plus the fees, putting zero deposit, which makes the LVR 104%. And guess what? You're paying zero in LMI, saving you nearly $40,000. I'll show you the exact number in a second. Now, for all those watching, if you love what you see, please hit that subscribe button. It would mean a lot to me. So now let me show you exactly how much would be a guarantee and how much won't. So this is the total loan amount here, the $1,040,000. That was funding the purchase price plus all the buying associated fees, as I showed you earlier. Let's call this loan Loan A. Now, Loan A is exactly 80% of the value of the property. This Loan A will be secured against the house or unit which you just bought. This has got nothing to do with your guarantors. Let's call this loan 240 grand Loan B. Now, this is for the 20% plus all the buying associated fees. Now, don't get it wrong, this loan is yours. You're the applicant or applicants, but this is the one which is guaranteed by your parents' property. So it's only 240, not $1,040,000. So the benefits of the guarantor is you borrowed 100% plus the buying associated fees, leaving you with your deposit to do some renovations. And what I've seen in the past is customers use their money to improve the property. After 12 months, we do our annual loan review here at MAD, where we review your rates, make sure it's still cheap, and we always revalue your property. Because you did those improvements, sometimes the house goes up in value and your loan's been going down because you've been paying it off. And once you hit that sweet spot of 80%, we actually discharge your guarantors. We've been seeing people discharge their guarantors in record times here at MAD, between 1 and 2 years, which is amazing to see. Another huge benefit of the guarantor is not paying $1 in lender's mortgage insurance. The max loan you can get for $1 million purchase is 95%, or $950,000, so a 50K deposit. Plus those fees are 40, so you can't get in without 90 grand. Even if you had 90 grand, you're gonna have to pay somewhere between $38,000 and $46,000. So let's again recap. The minimum deposit to buy for $1 million is 5%. That's 50 grand. The fees for $1 million property is 40, meaning you're gonna have to have 90 grand to buy at least $1 million property. But if you don't have a guarantor, you'd be paying LMI. LMI is between $38,000 and $46,000. And also when you buy, you got no money left. Whereas a guarantor loan, you don't pay any LMI, and you got 50 grand in the bank. Other things to mention is the interest rates are way better as a guarantor loan than a 95% loan, which makes a big compounding difference. If you like what you see, if you're on the same wavelength, you want to achieve your version of financial freedom, please subscribe to MAD, where I'm all about more bucks in your pocket rather than these banks. Don't forget, have a mad day.